Hey everyone, it's Jose Laya, and it's been a few months since my last market update, and we've had time to assess the data and take the pulse of the market from buyers, sellers, and brokers as well. Let me start by saying that the market is not crashing. Don't believe all the news headlines you see, they never dive deeper into the numbers to put it in context. Let me cut through that noise. We are in the midst of a correction, returning to a normal market. What makes this a bit more dramatic is that we're coming off one of the hottest real estate markets we've ever seen. The euphoria, the perfect storm of a market that we had the last 2 years, with ultra low interest rates coupled with the pandemic buying spree. Coming off of those highs, as we get back to a normal market, there will be some bumps along the road. So where are we now? Let's start with the supply side. Since my last market update in August, we had seen the prior month's inventory increasing at a steady pace. We then noticed right around mid-July to about through August, it appears sellers were more concerned with their summer travel plans, as we noticed a slowdown in new listings coming on the market. Right around early September, for the next 30 days until about mid-October, we did see new listings coming on the market at a little bit faster pace. By early September, we did start to see an uptick in new listings. Then right around mid-October, for about the next 30 days, so about a couple weeks ago, which takes it to from mid-October to about mid-November, we had a huge uptick in interest rates. Interest rates were right around 5%. They jumped to over 7%. Once this occurred, the news headlines were everywhere. Buyers are panicking. Highest rates in 20 years. This caused a short-term panic in the market. Not only did we have buyers pausing their home search, but we actually had sellers taking their listing off the market. Fortunately, in mid-November, just a couple weeks ago, to today, we have seen rates started to decrease, and they're now hovering around 6.25% to 6.5%, just depending on the day. Once these rates started decreasing, we did notice an uptick in new listings and have noticed this trend continuing. We just need to see if this trend holds so we can get more inventory. So of the inventory for sale and that has sold, we've noticed there's a big difference in the market between properties that are selling and those that are sitting on the market. There's two key points that we notice on the properties that are getting sold. Number one, they're priced correctly in today's market. Number two, they're turnkey properties, meaning that they've been mostly updated. Remember, buyers' purchasing power has decreased due to higher rates, and their payments have increased. So they're very cautious about having to put out even more money out of their pockets for repairs or updating the property. Unless a seller is willing to reduce the price considerably, they're just going to sit on the market with no takers. Right now, we're in this tug of war with sellers in pricing their properties correctly for today's market. This causes the property to sit. Then what happens is that buyers start their search online and are noticing properties on the market 30 days, 45 days, even 60 days. And they're automatically dismissing the property, thinking there's something wrong with it because it's been sitting on the market. Remember, most buyers have been conditioned to the last couple of years where properties were selling in 1 day, 1 week. Now they're seeing 30 days, 60 days. Something's got to be wrong with this property. They're automatically dismissing it and they're moving on to the next. This is also causing properties to sit on the market even longer. So we have to be very sensitive with sellers and talk to them about the importance of days on the market. So from the supply side, even though we are seeing increasing inventory, we are noticing that it's increasing slower than expected. We're still in a range of about 2 to 3 months of inventory for most parts of town. We still need to get to about 6 to 7 months of inventory for what's considered a normal market. We believe this is due to sellers not having where to go once they sell and not wanting to get back in the market at higher rates. We believe this is keeping a lot of the properties from coming on the market. Let's look at the demand side now. The demand side has softened. We believe there's 4 things affecting the demand side for properties, which will keep a damper on prices and the velocity of sales. Number 1, we'll stick with interest rates. Like I said, since August when I posted my last update, rates were around 5%. They then jumped up to almost 7.5%. That caused a bit of a panic and pause in the market. Even though they've settled now at 6.25%, 6.5%, we're hoping to see buyers jump back in, but it did cause a pause in their search. Number 2, the influx of people moving to Miami has slowed down. It hasn't stopped, but given where we were the last couple of years, it has slowed down. Number 3, companies have started to lay off employees. More importantly, you're starting to see large tech companies lay off hundreds and sometimes thousands of employees at one time. And most of these employees are high earners. Number 4, the stock market has not recovered and it's continuing its decline, which is amounting to trillions of dollars in lost valuation. Just in the last 30 days, we've had the collapse in values of cryptocurrencies with the fallout of FTX, which we believe we still have not seen the effects of this play out in the market. So in summary, yes, we are in the midst of a correction, but the market is strong. It's just very sensitive. Demand has slowed a bit, but we still have low levels of supply as it just hasn't been consistent enough. Buyers, yes, rates are higher, but pricing has come down and we finally have more inventory to look through, and sellers are willing to negotiate just to get the deal done. Sellers, if you price your property correctly and it's in good condition, it will sell very fast. Right now, we're in a very important phase in which if sellers want or need to sell, they really need to work with a professional and listen to our advice. So that's our market update for December. We hope to have been a source of knowledge for you. I am Jose Laya, and I was born and raised right here in Miami. As I start my 18th year in this business, I can proudly say I love being able to help buyers and sellers buy real estate and sell real estate in this wonderful city. Stay tuned for upcoming videos. We hope you all have a wonderful, healthy, and happy holiday season. We'll talk soon.